PNC Bank could be one of the most overlooked major banks in America. They don't necessarily advertise flashy high limits, but when structured properly with them, they scale quietly. In this video, we're going to help determine how PNC judges who gets access to credit, capital, and even mortgage leverage. The goal of every single video on this channel is to help you master relationship banking so you can leverage those banking relationships to make them profitable and to increase your net worth. PNC Bank is somewhere hovering between the sixth and eighth largest bank in the country, depending on what metric you judge them by. And they are literally one of the most complete banks in the country. They're kind of heavily situated on the East Coast, but you can get access anywhere in the country digitally with them. I myself am not in a state that PNC operates in directly with branches, but have established a relationship with PNC a few years back. And they are literally one of the most well-rounded financial institutions you're going to deal with. We're talking about the consumer side. We're talking about small business, a full array of products in small business, mortgage products, educational products. They literally have it all. Wealth management. They are great for funding, great for capital, and great for increasing your net worth. So we're going to dive deeply into PNC Bank, go over the data points on how to be successful, who this is for, the different products and services, and how to use them to close the wealth gap and increase your net worth. So as I already alluded to, we'll be taking a look, and I'm reading from my notes for those of you who may be new to the videos or new to the channel as a whole. I like to read from my notes just to make sure I'm on point and covering everything that needs to be covered, because if you've caught any of my previous content, I can ramble all day on these topics. So I do try to read from my notes to make sure we stay on point. So we're going to be covering PNC's underwriting culture, the bureaus that they tend to pull from, highest known limits on their cards, business and mortgage strategy as a whole, who PNC is best for, and wealth gap levers. So when it comes to risk culture with PNC Bank, they're conservative, but not as strict as a U.S. bank that I've recently covered. PNC Bank is kind of right in that mid-tier where they're not going to let you walk in the door and come get $30,000 or $40,000 at 0% off the street easily. But on the flip side, you're not going to also get a Capital One U.S. bank bucketed $500, $1,000 limit, and you're stuck there for years. They're one of those banks that's kind of right in the middle where you do need to be strategic with them. But when you get in properly with them, you can start to see success relatively early. And as I mentioned earlier, scale effectively with them in a relatively short window of time. So they are relationship aware, as I would describe it. Not necessarily a Navy Federal situation where it's like, you can get over all these other immediate disqualifiers of like bad credit and ultra thin credit profiles by having a really good relationship with them. But they're relationship aware. So you can come in the door, you still need decent financials. But if you develop a good relationship with PNC Bank, you can find yourself having tremendous success with them, again, relatively early. So it's kind of a balance yet again. Deposit behavior focus. That's most institutions we're going to cover. PNC Bank's no exception. Moderate inquiry sensitivity. So let's talk a little bit about the bureaus that they tend to pull from. Oftentimes Experian, sometimes TransUnion, and rarely Equifax. You will notice with larger private banks, this is a common sequence. Not always, so you have to pay attention video by video, bank by bank. But in this case, that's the trend. Let's talk about a few dislikes for PNC Bank. 4 more inquiries in a relatively short window of time. Think six months or less. Aggressive account velocity. Again, a scenario where you're like opening and closing accounts at a consistently high pace. Not a good look. High revolving balances are another one that PNC Bank has shown to not be favorable towards. They do favor long-standing relationships, so this does matter with them. Moderate credit seeking. Okay, they're not like crazy inquiry sensitive where you didn't try that 1 or 2 banks and it's out with them, but they're not as flexible or friendly as maybe an American Express where you can try 3 or 4 of the banks and still have potential success with them either. Kind of right in the middle yet again. Strong deposit flows. So this one works at the majority of financial institutions. PNC Bank loves this as well. So PNC values quiet stability. Let's talk about a few of their credit card products on the consumer side. The PNC Cash Rewards Visa is going to be kind of your everyday daily driver. You're looking at 4% on gas, which is sweet. 3% on dining, 2% on groceries, which is also really solid. Highest known limits commonly 3,000 to 15,000. Strong profiles have seen 20 to 30,000. It's best for stable, mid to prime tier earners and borrowers. PNC Core Visa, low tier product, starter friendly limits, We're talking about 1,000 to 10,000 typically. Good for credit builders, right? PNC Points Visa, Travel Points Model. That's one's going to be their high-end travel card. So moderate underwriting limits, $5,000 to $20,000 is kind of a standard known, but increased limits with relationship tenure. So again, this is going to be one that leans towards a travel focus category. The first card I mentioned also offers a respectable 0% window. So that's something else to keep in mind about the first one that I mentioned. So if we talk about the business banking side of things, PNC is strong in business, and they genuinely are. So they have business checking tiers, SBA lending, treasury management, merchant services, lines of credit. And this is also including potentially $25,000, $50,000 in no-doc lines of credit with them at the time of this recording. This is something that has been going on for some years now. You know, banks change these things around, but PNC has definitely been one that you can go and establish an okay relationship with and get access to potentially a line of credit with them, maybe $25,000 to $50,000 with no docs on a well-structured business and an existing business banking relationship. That having been said, they do offer significantly more. We're talking about, again, merchant services, industry-specific solutions. So if you're in professional services, real estate, there's veteran-owned focus features and benefits, women-owned businesses. They have retirement plans for your employees if you're a business that has employees. Like literally, you can do nearly all of it with PNC Bank. I mean, like literally a litany of products. And I love that about banks. I love banks that have dense product profiles, because that means that you're going to be able to get a lot more out of that banking relationship than some of these banks that, like a Navy Federal, for example. No shade to them, but their business side is very basic. There's not a lot happening on that end. So PNC Bank, again, extremely broad, diversified, and in-depth financial institution. They often pull from Experian for business credit cards. Business credit card limits typically $5,000 to $25,000. Strong profiles exceed that. And that's going to include having 1 to 2 years in business, clean personal backing, consistent deposit history. These things lead you to somewhere north of $25,000 in limits with PNC Bank if you have your ducks in a row. PNC likes deposit visibility, meaning that they want the revenue ran through their financial institution. If revenue doesn't flow through them, leverage weakens. Doesn't mean you won't have any success, but you could find yourself in a scenario where you're not getting nearly as much success as somebody with similar data points that actually runs the deposits through them. So PNC is also serious in the mortgage department. Your standard conventional loans, FHA, VA, HELOCs, construction to permanent, so ground up construction. The underwriting perspective, they're going to be strong on DTI discipline. Asset seasoning is very helpful. Income documentation, it's mortgage products, so 9 out of 10 times that's coming with it anyway. They are very, very good for first-time home buyer programs, community lending programs. So this means that they're going to have flexible mortgage underwriting products. And this is a gift because, again, I see almost every time the wealth gap is also a home ownership gap. Contrary to what so many people have been saying the last few years, making it, taking huge shots at home ownership in America. Let me tell you something. It's your first major physical piece of leverage in the financial system is owning your home. Your flexibility, options, and your baseline changes dramatically in the eyes of the financial system once you own a home. PNC Bank has great mortgage products that can help you get into your first property and on that property ladder, or maybe even your next home if you already own a home. So PNC, again, very attractive, broad-based financial institution when it comes to what they offer. So this is a real wealth gap lever. When we talk about home ownership, compounding matters. You want to own your home, generally speaking. Everybody's situation is unique. There are scenarios where I may not recommend it. But generally speaking, most people need to own some form of real estate, whether it's a primary or an investment property. Let's not get into the weeds of whether it's a primary home. I think a lot of times that gets convoluted. If you rent your apartment, but you own a couple rentals, you're likely winning. So let's keep that in mind. So let's talk about other wealth gap levers that PNC offers. Structured credit growth. As I mentioned on the consumer side, they literally offer everything from credit builder cards all the way up to high-level travel rewards cards and everything in between. Multiple 0% offer cards with great everyday cashback sections that are made for that mid to prime borrower. So they have great credit growth potential. Stable business lending. I mentioned $25,000 to $50,000 in no doc funding And then you go up, graduate from there as you get your business financed and all your documentation in order. Year 1, year 2, they do SBA backed funding. They have a lot of other, separate funding that they offer, conventional funding on the business side. So, and again, they also offer the merchant services, which is payment solutions, your ability to accept credit and debit card. This is powerful because if you do all of this under the roof of PNC Bank, your pathway to funding with them is going to be much smoother. And because they offer all of this in-house, it just makes it that much more feasible. Mortgage access, we just talked about that. Relationship banking. So they reward deposit consistency, moderate utilization, long-term engagement. PNC is not flashy, but stable access will compound with them. They're a really strong institution. You're going to hear me say that multiple times until this video closes out because I love everything they offer. So positioning properly with PNC Bank. If you were my client and we were trying to work on a game plan, a blueprint to walk into PNC Bank for the first time and have success, or you bank with them and we need to restructure how you're doing things, number one, open your checking account. Establish a 3 to 6 month deposit history. Add an entry-level credit product. So get one of their early tier credit cards. Even if you got a nice profile, I wouldn't necessarily go for the jugular out of the gate. Keep utilization under 20%. Avoid aggressive velocity, opening and closing products. And apply for business or mortgage strategically. So what I would recommend, gauge it based on your personal circumstances. If you have a well-established business and you start your consumer relationship first, which I usually recommend, you want to start your business relationship shortly thereafter because your business is established and has the documents it needs to go into the door with confidence and good structure, then I would say go for it. If you're like going in on a consumer side and you have a business idea or you just started a business, let that personal side cook for a handful of months and let them get comfortable on that side. So when you go on the business side, you'll have better success earlier on, if that makes sense. Because again, you need good personal backing for the business side to work. So you can lay that foundation by letting the personal side marinate for a minute. Now, mortgage is going to be the same thing. You want to go in based on your personal fraud. If your financials are in order and you're ready to go, then go for it when you get in the door. But if you want better success, if you want, a smoother underwriting, if you want some of your necessary documentation and qualification to already be showing itself, then what I would recommend is get your personal relationship brewing for a little while and go for your mortgage after a handful of months. 6 months is ideal. So PNC isn't built for optimizers. It's built for operators. And I will be talking about operators a lot more on this channel because the financial system truly rewards operators over everything else. They're not built for optimizers. Those who are looking to get those quick hit credit products or those quick bonus offers on credit cards, etc., run in and get all of the value and then run out of the door. That's not who's going to have success with them. They're going to be much better set up for operators, people who go in and create strategic relationships, get their hands on those resources, use those resources strategically and effectively, grow the relationship, go back and repeat the cycle. They're looking for operators. That's who you're looking to be in this financial system as a whole, to be honest. So PNC doesn't scream high limits. It quietly builds them. Comment your PNC limit down below. Let me know which bank you would like to see covered next in the series. And I am a little bit ahead of schedule on these. So if I don't cover your bank right after this, then be sure it's likely coming down the pipe. And then also subscribe if you want the blueprint. If you want to continue to get breakdowns by these financial institutions and be able to get in the comment section and get more and more in-depth clarity on your specific details with a financial institution and how to grow with them, then make sure you're subscribed to the channel. To all my pioneers, welcome back. To my new viewers, welcome in. Of course, I want each of you to like, comment, share, subscribe, support the channel so the channel can continue to support you. Boost the video if it gives you the option. Get in the description section down below. Time with me on Instagram and TikTok. If you're new to the channel, for those of you who are curious, I'm a career banker by trade, financial services professional, 14 plus years in the field at the time of this recording. I have a mortgage loan originator's license, life insurance license, FINRA investment license, and a small business banker and lending certified. You're getting this content from somebody who's helping a book a business and 25 million plus in deposit relationships, nearly 50 million plus in investment relationships, 7 to 8 figures a year in lending relationships between consumers and small businesses. I'm helping everyday individuals and small businesses grow their revenues and net worth just like you on a regular basis in person, and I'm trained and certified to do so. So If you have any particular insights or feedback or thoughts, of course, again, comment it down below. And other than that, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.